All right, we are about to pull apart one of the most incredible stories in modern finance. It's about a true ghost in the machine, a guy who became one of the most successful traders ever, not from some fancy high-rise office, but from his bedroom. This is the legend of BNF.
$160 million. Just let that number sink in for a second. That is the kind of fortune we are talking about here, all earned by one person playing the stock market.
And here's the part that just blows your mind. All of it, every single dollar, was made from a simple bedroom. We're talking no team of slick analysts, no corner office, and definitely no Ivy League finance degree. It was literally just him, his computer, and the markets.
So, that's the big question, isn't it? How in the world did one guy, starting with practically nothing, pull off something that entire hedge funds with billions under management struggled to do? Well, let's get into it.
So our story kicks off with a young Japanese college student, a guy named Takashi Kotogawa. Now, you probably know him by his online handle, BNF. And his journey? Well, it starts in the most ordinary, unassuming way you can imagine.
Picture this, it's the late 90s, and Takashi is your typical broke college student, pretty much living on cup noodles. But then one day, boom, everything changes. He catches a TV show about this legendary investor, Victor Niederhofer, and something just clicks. The risk, the strategy, the sheer game of it all. He was totally hooked. He even nicknamed himself BNF, which is kind of a play on Niederhofer's name. From that moment on, it became his obsession. He started grinding at part-time jobs, saving every single yen, and spending every waking moment glued to stock charts, just trying to crack the code. And after 2 straight years of just relentless saving, scrimping, and sacrificing, this is what he had, $16,000. Now, it might not sound like a lot to take on the entire stock market, but you have to remember, this was every single penny he had scraped together. For BNF, this was his ticket into the arena.
Now here's what's really wild. The timing. BNF didn't start trading during some crazy bull market where everyone's a genius. No, he jumped in right after the dot-com bubble exploded. This was one of the most brutal bear markets in memory, especially in Japan, which was still stuck in its lost decade. I mean, it was a total baptism by fire.
So how in the world did he survive, let alone crush it? Well, he cooked up this simple but incredibly powerful strategy. He called it moving average divergence. The core idea? Find stocks that had been absolutely hammered, stocks that people were panic selling, stocks that had fallen way, way below their recent average price. He wasn't trying to find the next Amazon. He was betting on that quick, sharp bounce back that almost always happens after a massive overreaction. He was a master of buying the panic.
And his process was like clockwork, almost robotic. Step 1. Scan the market for stocks that had just cratered, dropping way below their 25-day moving average. Step 2. Identify the exact price he wanted to get in at. Step 3. He'd buy the second it hit his target. And 4. The moment it bounced, he was out. Sell. Take the profit. It was a pure system, totally built on rules, not gut feelings or emotion.
But okay, this is where you see the real genius kick in. He started noticing that some of his trades were losing money. And instead of getting frustrated or giving up, he got obsessive. He analyzed every single loss. And he figured out that a one-size-fits-all approach just wasn't going to cut it. An IT stock acts totally different from, say, a service sector stock. So he evolved. He started creating custom rules and different deviation targets for each sector, which gave him a way sharper edge.
So fast forward to 2005. By now, BNF is already a seriously successful trader. But one morning in December, a single bizarre trade was about to launch him from just being successful into being a flat-out legend. Everyone was watching the IPO of this new company, JCOM Holding. And then, the unthinkable happens. A trader at this massive investment bank, Mizuho Securities, makes a typo. A catastrophic, career-ending typo. What we call a fat finger error. Instead of selling one single share for 610,000 yen, he accidentally put in an order to sell 610,000 timeshares for 1 yen apiece. I mean, you can't make this stuff up. The market was instantly flooded with shares that were basically being given away for free.
Now, while everyone else was panicking, or just frozen thinking it was some kind of glitch or fraud, BNF saw it for exactly what it was, a once-in-a-lifetime opportunity. In just a couple of minutes, he scooped up 7,100 shares at that rock-bottom price, putting a huge chunk of his capital on the line.
And this quote, man, it tells you everything you need to know about how his brain works. See, for him, the market wasn't about greed or fear. It was a strategy game.
He didn't see some faceless corporation, he saw an opponent who had just made a massive blunder. He was completely calm, detached, and ready to strike.
Now, a lot of other traders who jumped in on the mistake sold everything before the market closed, just to lock in a quick profit. They were terrified the whole trade would be reversed. But BNF, he did something incredibly bold. He sold a few shares, but he held 6,000 of them overnight. The risk was just off the charts. He could have lost millions, but he trusted his analysis. And sure enough, Mizuho had to buy back the shares at a fair price. BNF's profit from that one trade alone was nearly $20 million.
That JCOM trade made him a celebrity in Japan. They called him the JCOM man. But his biggest test, the trial that would truly define him, was still to come. In 2008, the entire global financial system started to crack, and this crisis was about to challenge everything he knew. So he makes his first huge mistake. He breaks one of his own golden rules: only trade what you know. He sinks $6.5 million into Lehman Brothers, thinking it was too big to fail. But he didn't really get the US market, and that investment went to zero, literally overnight. After that massive loss, he vowed to stick to Japan. But then the crisis went global, and he discovered that the very same strategies that made him a millionaire were suddenly just not working anymore.
He kept trying to use his moving average strategy on the Japanese market, the Nikkei, as it was falling. But this time was different. The market just kept dropping right past his buy points. He was getting hammered day after day, bleeding money. What worked before was now failing spectacularly. And right here, this is the crucial moment. Any other trader would have panicked or revenge traded or just quit. Not BNF. He stayed completely disciplined. He cut his losses, and he went back to the drawing board. He went back to the charts and realized the entire personality of the market had changed. The rules were different now. His old targets were obsolete. The game had evolved, and he needed to evolve with it.
So with his new recalibrated strategy, he waited. And as the market kept plunging, he didn't just dip a toe back in. No, he backed up the truck. He went all in, building a massive, diversified position in over 90 of the most beaten-down stocks in Japan, a bet totaling almost $65 million.
And the result? Absolutely incredible. When the market finally did bounce, it bounced hard. He sold everything and walked away with over $12 million in profit. This right here proves his real genius wasn't just one strategy. It was his incredible ability to adapt and overcome.
So you go from this college kid with 16 grand to a legend worth over 160 million. BNF's story is just one of the most remarkable tales in finance. There's a reason they started calling him the god of traders.
So what's the secret sauce here? What can we actually learn from this guy? Well, it really boils down to a few core principles. He had supreme discipline. He cut his losses without a second thought. He knew he had to constantly evolve his strategy. He treated his losses as his greatest teachers, as pure data. He learned to ignore the noise and the panic and just trust his own work. And maybe most important of all, he mastered his own psychology. He knew the market is really just a game you play against yourself.
And that really leaves us with one final thought, doesn't it? BNF's whole journey seems to suggest that while strategies and systems are great, they're all temporary. Markets are always changing, and any perfect system is eventually going to break. So maybe the real secret, the actual holy grail of trading, isn't found in some chart or algorithm, but in mastering the discipline and the adaptability of your own mind.